the most explosive asset class in precious metals is silver equity. It's right in front of you. The truth is that the silver sector is one where nobody has any expectation of success, when success is, in my point of view, almost inevitable. And I think precious metals are going to go up. 2 years from now or 3 years from now, when the price of silver is above $50 and the silver equities have all tripled, these same people who are snoring and yawning today are going to be begging you for a list of silver stocks after they've tripled. That's the lesson. It's just wonderful.
Yeah.
But I'm probably more excited about the precious metals sector. The fact that they haven't done well for the last year is attractive to me, first of all, because the goods are on sale. I'm less excited about a sector where the price has doubled than I am about a sector that's fallen by 10 or 15%, particularly where I think it's going to go up. And I think precious metals are going to go up. We've discussed why. In the first instance, precious metals do well when people are concerned about the maintenance of their purchasing power in more conventional. Why might they be concerned about US dollar instruments? Well, quantitative easing, debasing the dollar. When it's done by Jake Ducey, it's called counterfeiting. When it's done by Congress, it's called policy. It's still counterfeiting. Debt and deficits. Jake, particularly people your age need to understand that debt and deficits are really a transfer of wealth from younger, hardworking people like yourself who haven't established their positions to old fat people like me who voted themselves all kinds of benefits but forgot to pay for them. Irrespective of the intergenerational transfer of wealth, they must make you concerned about the efficacy of the purchasing power of your currency because they have to print more currency to satisfy their obligations to old geezers like me. But the most pernicious, of course, is negative real interest, described by Franz Pick as certificates of guaranteed confiscation, or by Jim Grant as return-free risk. Think about this. The U.S. 10-year Treasury, they pay you 1.5% in a currency that they acknowledge is depreciating at 5.5%. In other words, the U.S. government absolutely promises to diminish your wealth by 4% a year compounded over 10 years. Not very attractive. So for those reasons, I believe that precious metals prices will trade higher. How much higher? I don't know. What I can tell you is this. Over the course of my professional career, precious metals and precious metals securities have had about a 1.5% to 2% market share among total savings and investment assets in the States. Right now, the same number is less than one half of it. If demand for precious metals and precious metals equities merely returned to mean, if they ignored quantitative easing, debt and deficits, and negative real interest, demand for them would triple. And that's precisely what I think. On top of that, Jake, the precious metals equities relative to the free cash flow they're making at today's commodity prices, not the prices that I think the commodities are going to go to, at today's commodity prices are cheap. And as you've come to know from these interviews, Jake, I love cheap. So I'm attracted to the precious metals equities. I'm attracted to the great big ones generating free cash flow. I'm attracted to the somewhat smaller ones that are generating even more free cash flow relative to their market cap, because I think the big ones will take them over. And I love to participate in takeovers. I'm interested in the development stage assets because the industry doesn't have very many good development stage assets in the pipeline, and they'll be taken over too. I'm interested in discoveries. It seems that there's things of interest throughout the precious metals equities landscape. I'm particularly because of the poor price performance in silver and silver equities. You'll recall earlier this year, they had the silver squeeze, which people suggest now has failed. It hasn't failed. It hasn't gotten started. The real silver squeeze is not about a whole bunch of new young people being attracted to the physical silver market so that they can break the banks. The real silver squeeze is when demand for silver and demand for gold return to their 4-decade median or mean, when current demand grows by threefold or fourfold in a market where silver supply can't increase that much. And the most leveraged asset of all, Jake, are the little silver stocks, even the big silver stocks. Our mutual friend, Doug Casey, told me 20 years ago, it's true today, that the combined market capitalization of the legitimate silver sector is so small that when the generalist money tries to crowd its way into it, it's like, quote, siphoning Hoover Dam through a garden hose. It just doesn't work. That's happened to me twice before in my career. And while the returns that I enjoyed weren't quite as glamorous, the returns that I enjoyed in the uranium sector. The truth is that the silver sector is one where nobody has any expectation of success, when success is, in my point of view, almost inevitable. In the first instance, investors of my age have been trained over the last 40 years that everything's under control, that no matter what sort of difficulty we get ourselves in, be it the tech wreck of 2000, the liquidity squeeze of 2008, the more recent COVID squeeze, it doesn't matter that the Fed has your back. The problem with that thesis is that the Fed has already spent its easy ammo. Do they take the interest rate below zero? Do you have to go to the bank and give them a toaster to open an account when they used to give you toasters for opening an account? My point is that what worked in the past doesn't necessarily work in the future, but the expectation of the future has been set by investors' experience in the immediate past. And in the immediate past, things just got better and better and better. And if any time things didn't get better, then the Fed came to your rescue, even to the extent of, quote, helicopter money during stimulus, where in a labor short economy, the Fed in their wisdom paid people not to come to work. The circumstance that you're talking about, which is to say the cost of living greatly outpacing average people's ability to earn, is something that is going to occur to people over two or 3 years, which is to say that the paradigm that people use to look at the circumstance that they're experiencing is going to change before your very eyes. We had 40 years to learn that inflation wasn't a problem, that government was our friend, all of those types of things. They didn't happen to be true, at least towards the end of that era, but people believed to be true. The idea now that people will willingly buy a 10-year treasury, will willingly accept a 1.5% return in a currency that's depreciating by 5.5%, means that we live in an era where narrative is more important to people than arithmetic. But the truth is, Jake, over time, arithmetic always wins. You will recall, and I think this is very instructive, Jake, to you and your listeners, that 2 years ago, when you and I would talk about uranium on your listeners experienced a collective yawn, except for the more idealistic of them who sent us hateful emails saying that we were promoting Hiroshima, Nagasaki, and 3 Mile Island. When the uranium price went from $18 a pound to $50, in other words, after the uranium price had almost tripled, after the easy money had been made, everybody cared. We're going to be talking about silver today, and some of your audience is going to say, oh shit, same old song for silver. He's been talking about silver for 18 months. And 2 years from now or 3 years from now, when the price of silver is above $50 and the silver equities have all tripled, these same people who are snoring and yawning today are going to be begging you for a list of silver stocks after they've tripled. That's the lesson. It's just wonderful. Yeah. And in terms of dimension, people say, well, the silver price has already gone from, $14 to $22 or $23, well, $30 on its way, and then on its way back down. Hasn't the easy money been made? Well, in the first bull market of my life, the silver price went from $1.50 to $50. In the second bull market of my life, silver went from a more advanced $5 to $50, which is to say a 10-bagger. So when people say to me that the bull market has run its course, either by way of duration or dimension, I say to them, perhaps you're not as old as me. Perhaps you haven't studied history, or perhaps you were just a lousy student. But the truth is that I think that the precious metals bull market is not at its midway point, that wind is in the sails of precious metals. And I have noticed in prior precious metals bull markets that the first half of the bull market was gold-centric, and the second half of the bull market was silver-centric. And when the momentum was established by gold, then silver picked up. And when the silver was established by the momentum occurred in physical, then the silver stocks, at least the high quality ones, not the junker, but the high quality ones, really surprised people with the extent and the rapidity of the rise. Again, for an illustration, what I would point your younger list in particular to was what they saw happen in the uranium stocks. Uranium did nothing for 3 years while the arithmetic was evident. It did nothing, even though the writing was on the wall that uranium had to go up and uranium stocks, pardon the pun, had to explode. We have the same circumstance in front of us now. The writing is absolutely on the wall with precious metals. History teaches us that when momentum is in precious metals, the market becomes silver dominant. And history teaches us too that the most explosive asset class in precious metals is silver equity.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.